What if I told you there's a way you could potentially double your money just by following in the footsteps of one of the greatest investors in history? Sounds pretty wild, right? Well, stick with me because today we're diving into Warren Buffett's portfolio and highlighting 3 companies that you might want to consider adding to yours. These picks aren't just hyped up stocks. They're strategic holdings of Berkshire Hathaway, the powerhouse run by the one and only Oracle of Omaha. We're talking about a global electric vehicle giant that's turning the auto world upside down, a beverage brand that's practically a household name in every corner of the globe, and a financial firm that's quietly carving out serious gains on Wall Street. If you only watch one video today, make it this one. Because by the end, you'll know exactly why these stocks are positioned for future growth and how you might be able to benefit from their success. First off, please give this video a like, share it with your friends, and hit that subscribe button if you're new here. Getting this video to 300 likes would really help my small channel grow and allows me to keep bringing you awesome content like this. Thank you. Let's start with BYD, traded under the symbol BYDDF on the OTC market. BYD is a Chinese multinational that's absolutely crushing it in the electric vehicle game. We're talking massive production numbers, an ever-growing line of EVs, and a serious push into electric trucks, buses, and even bikes. BYD isn't just chasing the EV wave, they're making it. Warren Buffett saw the writing on the wall way back in 2008 when electric vehicles were barely a blip on the radar. Berkshire Hathaway jumped in early, and let's just say, that investment has aged like fine wine. It's now worth a fortune, and it's a major win for Buffett's long-term strategy. Here's a neat fact. When Berkshire Hathaway invested in BYD in 2008, they bought a 10% stake for around $230 million. That stake has soared in value, at one point surpassing $7 billion, making it one of Buffett's most successful international investments. But here's what really sets BYD apart. They're vertically integrated. That means they control nearly everything, the design, the batteries, the assembly. From start to finish, it's all in-house. Compare that to a company like Tesla, which relies on outside suppliers for key components. BYD even manufactures batteries not just for themselves, but for other automakers too. That's like Apple designing chips and then selling them to Samsung. In fact, BYD is a leader in electric buses across China where the government is pouring resources into clean transportation. That gives them a huge advantage at home, but they're not stopping there. They're expanding into Europe, North America, and beyond. That global reach is huge for long-term growth. And here's the kicker. BYD is still massively undervalued. The company has a market cap of $128.9 billion and an EPS of 1.9, yet it trades at a PE ratio of 21.33. In 2024, BYD raked in approximately $106.3 billion in revenue and posted a net income of around $5.4 billion. Despite those large numbers, the stock is only trading at $44.15 per share. This stock is a bargain, and while the dividend yield is a modest 0.99%, the potential for price appreciation is where the real upside is. BYD sells more EVs than Tesla, yet its valuation is significantly lower. If you're a value investor, this one should be flashing bright green on your radar. Investing in a Chinese company comes with some geopolitical risk, but BYD isn't just focused on China. They operate in more than 70 countries and regions. That kind of global presence helps balance out the risk and gives them exposure to emerging and developed markets alike. They're also pushing hard on innovation, from advanced battery tech to developing their own in-car operating system similar to Tesla's. All of this adds layers of control and uniqueness to their products. If you want to invest in the future of transportation, BYD is a strong contender. But remember, even if this stock looks exciting, always do your own research before investing. The stock market can be unpredictable, and it's important to have good advice before investing. Oh, and if you're getting value from this stock analysis, a like and subscribe goes a long way for my channel. And if you're thinking long-term, gold could be a key part of your strategy. I've got a free guide on gold IRAs linked below. Hang tight, I'll explain why it's worth checking out at the end of this video. The next stock on the list is a name everyone knows, Coca-Cola, ticker symbol KO. This brand is iconic. Coca-Cola is more than just a soft drink, it's a cultural staple. It's refreshment, nostalgia, and global reach, all wrapped in one. With over 200 different brands, like Sprite, Fanta, Dasani, Minute Maid, Coca-Cola serves up billions of drinks every single day. Their distribution network is a logistical marvel, getting beverages to every corner of the planet. From bustling cities to remote villages, Coca-Cola is there. Coca-Cola certainly isn't flashy, and it's not tech, but that's exactly why investors love it. Coca-Cola is the definition of consistent. Through recessions, market crashes, pandemics, you name it, they've stood tall, and they're still innovating too. From low-sugar options to bottled teas and sports drinks, they're always adapting to meet changing consumer tastes. They're even reworking their products to reduce sugar content and rolling out smaller sizes to address health concerns. This proactive approach has kept them in the good graces of consumers and investors alike. And with a global infrastructure that ensures availability practically anywhere, Coca-Cola's reach is unmatched. With a market cap of $294 billion, Coca-Cola brought in $47.06 billion in revenue last year and netted $10.63 billion in profit. Its EPS sits at $2.46, and it trades at a PE ratio of 27.79. Investors are clearly willing to pay a premium for stability, and with a dividend yield of 2.81%, it's a favorite for long-term income seekers. So if you're looking for a solid, dependable stock that pays you while you wait, Coca-Cola is a no-brainer. It's not just a piece of your portfolio, it's a piece of history. Now let's pivot to a company you might not know as well. Jefferies Financial, ticker symbol JEF. It's not a household name like Coke, but this investment bank is quietly making some serious moves. Jefferies is a full-spectrum financial services firm that's been around since the 1960s. They do everything from capital markets and asset management to investment banking and securities trading. Think of them as a Swiss Army knife for financial services. And while the words investment bank might trigger flashbacks of the 2008 crisis, Jefferies isn't some reckless Wall Street giant. They're leaner, scrappier, and more focused on building lasting client relationships. They've carved out a niche by staying nimble and staying sharp. Here's something interesting about Jefferies. It was one of the few investment banks that not only survived the 2008 financial crisis without a bailout, but actually emerged stronger by strategically acquiring parts of other struggling firms. Warren Buffett clearly sees their potential. Berkshire Hathaway has been increasing its stake in Jefferies, another quiet but telling move. Jefferies is positioned to benefit from three big trends: the growth of private markets, the rise in demand for alternative investments, and consolidation in the finance sector. They're advising private companies, offering unique investment products, and picking up market share as smaller firms fall behind. Now, Jefferies isn't without risks. The financial sector is cyclical and sensitive to interest rates, but the company is well managed, diversified, and forward-thinking. With a market cap of $8.9 billion, they pulled in $10.5 billion in revenue in 2024 and had a net income of $669.27 million. Their EPS is $2.84, and the PE ratio is a very reasonable 14.84. But get this, they offer a 3.25% dividend yield, higher than both BYD and Coca-Cola. That's a sweet payout, especially for a company still flying under the radar. And with their investments in financial technology, global expansion, and a culture of inclusion and innovation, Jefferies is setting itself up for long-term success. They're not just reacting to trends, they're creating them. Their client-focused approach and deep expertise have won them loyalty and recognition across the financial world. And if you're looking for a strong, undervalued player in the finance space, Jefferies should absolutely be on your watch list. So there you have it, 3 Warren Buffett stocks to consider for your portfolio. Each of these companies tells a different story. BYD with its undervalued growth potential, Coca-Cola with rock-solid stability, and Jefferies with its attractive dividends and under-the-radar value. Which one are you most excited about? Let me know in the comments. But as always, do your own research and make sure it fits your investment strategy. And if you found this video helpful and enjoyed these stock picks, take a quick moment to hit that like button and share with your friends. These stock plays are exciting, no doubt, but real wealth? That's built with a long-term strategy. And part of that strategy isn't just picking the right stocks. It's making sure your portfolio can withstand anything the market throws at it. Recent trade policies, including new tariffs, have introduced volatility into the markets, prompting investors to seek stable assets. That's exactly why gold has been a staple in portfolios for centuries. Gold has historically served as a reliable store of value during such times, with prices recently reaching record highs. It's one of the few assets that always has demand, no matter what happens in the economy. I've found a company that offers Americans a free guide that walks through exactly how to add real physical gold to their retirement accounts. No gimmicks, no obligations, just solid practical knowledge. Click the link in the description and grab your copy, because the best investors don't just think about the next year, they plan for the next decade.